Welcome back. You're still watching Trading Hour on CNBC TV 18, and it is all about earnings. So let's invite our next management. eClerx is in focus on the back of their third quarter earnings. The company posted a near 6% growth in dollar revenue on a sequential basis, and the EBIT margin looks healthy at around 25%. To discuss the quarter gone by, the numbers, as well as the outlook, we are joined by Rohitash Gupta, who's CFO of eClerx, on the show now. Mr. Gupta, thanks a lot for joining us. This is Pavitra. So I want to begin by asking, for 9 months, your revenue growth has been around 41%, right? This includes, of course, organic as well as the contribution from Personiv. Could you take us through what just the organic growth could look like going forward? Do you think around that 20% odd figure is achievable?
I think industry as well as eClerx were beneficiaries of the digital wave that came after the COVID and increased the spends by a lot of Fortune 500 type companies, given the labor market shortage in Western countries. And I think this trend is likely to continue for some more time. And that's what we are also hearing from industry experts. So far, so good. And I think there might be some tapering off in the growth for the industry, which might reflect in eClerx also. But in near term, this trend looks very supportive.
Gupta, why do you say industry growth will taper from here on?
I think, FY21, because of the COVID impact, it has a low base effect, right?
Right.
So what you see in FY22 is little inflated because of that.
Okay, so X of base, there are no headwinds.
Correct, absolutely. There are no headwinds to be seen in near term. Correct.
Okay. You get revenues from 3 offerings. One is customer operations, digital, and financial services. What is the revenue contribution from each of them, and what is the growth trajectory for all of them? I'm sure while growth may be broad-based, but each sector, each segment, each offering has its own headwinds as well as tailwinds. So if you could just outline the industry picture for each of these.
Yeah, so we don't disclose the segment mix, but generally, customer operations vertical is smaller than the other 2. And then we added Personiv business, which is kind of 4th business for us as of this moment. In terms of, headwinds and tailwinds for each of these businesses, financial markets has been on a growth track, given the increased spending by banks, both on the consulting side as well as on the BPO side. And our offerings related to, which we call managed services, which are very IP-led, all the process-oriented, they have been growing very, very rapidly, especially on the regulatory and KYC and AML kind of spaces. So there, I don't see a lot of headwinds, a lot of tailwinds there in financial markets business. In digital, I don't need to say, I think generally the spends have been rising. There is more adoption by the erstwhile non-digital player or brick and mortar players. So that has been supportive and will remain supportive in medium term. Customer operations actually has been a surprise for the industry as well as for us. Because anything which is contact center related is generally seen to be lower end compared to KPO type business, but that was not the case because of work from home scenario across the world, more digitalization. The call volume and the support volume required by the end customer has dramatically increased, and I think that's a kind of semi-permanent shift if I can read the future. So the volumes have increased, and customer operations business was beneficiary of that trend.
All right, Mr. Gupta, we were just looking at the breakup. Your revenue from top 10 clients, the growth is at around 7.5%. But if I look at the non-top 10 clients, that seems to have slowed quite significantly. It's just around 3%. Could you take us through what went wrong here?
No, so I think some of the numbers need to be seen under the hood. So because we did acquisition and we report that metric based on last 12 months trailing revenue, so the Personiv acquired entity clients, they are accumulating revenue phase, right? So there is a lot of shift in the buckets. So I don't think there has to be anything read from that. The real fact under the hood is that our non-top 10 clients have been growing at least twice as fast as top 10.
Okay. So in the past, say, FY16 to FY19, the revenue growth for eClerx has been flat. And this is on account of large roll-offs. Many of your projects didn't get renewed despite you winning new orders and getting in work from some of your clients. Is there a risk of roll-offs from here on, some loss of revenues or deals from your clients?
As of this time, we don't see such events on the near-term horizon. But remember that as the environment changes, those risks could emanate on the other side of pandemic. But I don't want to foresee any negative events. So far, nothing on the horizon. Okay.
Have any of your clients brought down the amount of work that they do with you, the scope of work?
No, there has been no large roll-off, and that's what we mean by roll-off, which is either partial client roll-off or full client going away. That hasn't happened in recent past.
Mr. Gupta, if you can just talk about your different offerings, it's customer. Sorry?
No, go ahead.
All right. So if I can just get a little bit more clarity on what you expect from your different businesses, whether it's customer operations or digital, could you take us through what the revenue from this is likely to be separately?
So yeah, that's what we don't disclose, the segment mix. But as I said, digital and financial markets are larger pieces of our revenue, followed by customer operations, and Personiv is the smallest piece which we acquired among the four.
All right, we'll leave it at that. Thank you, Mr. Gupta, for joining in. So that is eClerx for you. For the markets, we're still down close to about 90 points in the Nifty. That's a cut of close to about 0.5%. The Sensex lower by 340 points. Mitesh Thakkar of earningswave.com joins us for a technical check on the markets. Mitesh, after 3 days of big gains, when the Nifty's rallied 600, 700 points, a little bit of a give back is always considered healthy. What have you made of this little correction that we are witnessing today?
Good morning. I think what you said is exactly what I've been thinking. I think typically what happens after a good rally, and we've really had nearly about 900 points kind of rally in the last 4 or 5 days. I think typically this should lead to pullback to the intraday averages. I think around 17,650, 625 zone is a good zone to explore longs again. That's where the pullback should possibly take support. And we're still trading with long bias given that the overall directional idea is still on the upside. So on the index per se, try to buy around 17,650, 660 with a stop below 17,580 levels, and I think we could retest yesterday's high and maybe even get past that.
Hi Mitesh, what stocks would you look at?
Couple of auto names on the list. I think the auto index is doing very well, so Maruti is a buy. It's also had about 3-4 days of pullback and is picking up again today, so that's a buy with a stop at about 8,670 for targets of around 9,000. And the other one is Eicher Motors. That's also reversing on the intraday charts. That's a buy with a stop at about 2,670 for targets of around 2,780 on the upside.
All right, Mitesh, thanks a lot for joining us with your take on the market and your technical picks as well. It is time for a short break. The Nifty Bank, by the way, is recovering a little bit. So if you can just get that chart up, it is now just a 0.2% cut in terms of the losses that we're seeing on the Nifty Bank. So that one has picked up a little bit. We'll get into a short break now, but you don't go anywhere. Lots more from our exclusive interview with the Finance Minister coming up after this short break.